In this video, you will learn how to identify and trade consolidation on gold easily. You will learn why consolidations occur, the consolidation trading strategy, and a lot of useful trading tips. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. First, let's open a gold chart and discuss how to identify a consolidation. We are on gold chart on a daily, and here you can see a very perfect example of the consolidation. You can see that first the market was very bearish, the market was falling rapidly, then the market started to grow and we saw a strong bullish movement. After that the price dropped with a high momentum bearish candle, and then we see a clear change of the market sentiment. The market stopped growing, the market stopped falling, the market simply started to trade in sideways. You can see that the market started to trade within a very narrow range for more than 2 weeks. That is a very perfect example of the consolidation. And when you see the wick sideways market like that, the first thing that you should do, you should correctly underline the boundaries of the consolidation, because once the market starts trading in sideways, it usually starts respecting some important resistance and some important support. Learn how to trade gold in my trading academy. Watch how I trade gold live on VIP daily live streams. For more info, check the link in the description below. When you draw the resistance, you simply take the highest high of the consolidation. It will be the upper boundary of its resistance, and its lower boundary will simply be the highest candle close. So that is our resistance. The support of the consolidation will be based on the same rules. We take the lowest wick, the lowest low of the consolidation. It will be the lower boundary of the support of our consolidation, and its upper boundary will be the lowest candle close. That is our horizontal range, the consolidation range where the market is trading at the moment. And what does the consolidation mean and why does it occur? It's all about the supply and demand on the market. When you see a strong bearish movement on the market, it signifies the selling imbalance. It signifies that the supply is stronger than the demand on the market, and the excess of supply pushes the prices lower. When the market starts growing, it signifies that there's the bullish buying imbalance on the market, and the market is growing because of the excess of demand. But what happens when the market is consolidating? It means that the supply and demand find the equilibrium. The excess of supply is absorbed by the demand, and the excess of demand is absorbed by the supply. It means that the market found the so-called fair value, the value that all the market participants agree about. Once you identify the consolidation range, you can trade it easily with the following trading strategy. Once you spotted the consolidation and once you identified the consolidation range, you should remember a simple rule. There is a very high chance that from the support of the range, the price will go up to the resistance of the range, and from the resistance of the range, probabilities will be high to see a bearish movement to the support of the range. It means that the support and resistance of the range will provide the perfect zones, the areas from where you can look for trading opportunities. Once you see the test of the support of the range on a daily time frame, wait for some intraday bullish signal. Open the hourly time frame and just watch how the price reacts to that and look for some bullish signal. For example, right here we can see a very nice tiny double bottom pattern that was formed after the test of the support of the range. The price formed the double bottom, violated its neckline, and went up to the resistance of the range. This time when the price tested the support of the range, here we got a very perfect example of a change of character. The price violated this strong intraday resistance, giving a strong bullish confirmation. So we can expect a bullish movement to the resistance of the range. Now, then let's examine how the price was reacting to the resistance of the range. You can see that right here, the price formed a very acute double top pattern, violated its neckline, and dropped. Right here we have a very nice descending triangle pattern. Then we also formed a bigger double top pattern right here. So just wait for some signal before you open the trading position from the resistance and the support of the range, because you can see that the zones are quite wide, and with the signal you will identify the exact point from where to open the trade. Always remember that the market will not stay within the consolidation range forever. At some moment the price will inevitably break that, and here's the main reason why the market stops consolidating. Usually when the market is consolidating, the market participants are waiting for some important news. They are waiting for some important fundamentals. Opening the economic calendar, you should identify the high impact US news. This can be the potentially important news for gold. And checking the economic calendar for today, we see the non-farm payrolls report. It is a very important news event that may change the balance of supply and demand on the market. Some positive US news may initiate a bearish movement on gold because of the sudden excess of the supply on the market, while the negative news may create the extra demand, and that will inevitably violate the boundaries of the consolidation. And once the market violates the consolidation range, you can follow this strategy to trade it profitably. After the release of the high impact fundamental news, pay attention to the reaction of the price to the support and resistance of the range. Bullish breakout of that and the candle close above the resistance of the range will give you a strong bullish signal. After the breakout, the broken resistance of the range will turn into support, into the zone from where you can buy the market, anticipating a bullish movement to the next strong resistance. And in our example, here is that resistance. If the price drops and violates the support of the range after the breakout, the broken support turns into a strong resistance, and that will be a very perfect zone from where you can sell the market and from where you can anticipate a bearish movement at least to the closest strong support. And in our example, here is that support. What I like about consolidation trading is that we can trade the market while the market is consolidating within the consolidation range, but we also can easily trade the market when it violates the consolidation range. The two strategies that we discussed will help you to trade it correctly. Let me know, traders, in the comment section what else do you want to learn in gold trading. Also, traders, join my trading academy and watch how I trade live. For more info, check the link in the description below. Also, traders, please don't forget to watch my other videos.